revenues have seen an uptick of 37%, strong net profit also coming in, EBITDA has also grown almost 94%. To understand as to how things have shaped up, whether this momentum can continue going forward in FY27 or not, we now joined by Arun Kumar Sharma, who's the President and CFO at UFlex, joining us now. Arun, thank you so much for taking out the time. Mahima this side. I think my first question is going to be about this fact, right? Q1 has been very, very strong for you. Do you think that this kind of growth momentum can follow through in the rest 3 quarters? And if yes, if you can give us some perspective as to how do you think that top line will end for FY27?
Yeah, thank you for having me, first of all. See, Q1 has been very good for UFlex. And it's not just because of one quarter result. It has been consistent efforts what they made over last so many years together. So a lot of capacities have come up on stream now, and those capacities are yielding results. And this momentum is going to continue for the full year because we have installed 2 new capacities as of now. One is WPP at Mexico, which is going to give us a good revenue. And then our recycling plant has also been commissioned at Noida, which is also going to upstream a good revenue targets now for us. So for the full year, we are very bullish on this segment. And whatever results you see for Q1, we are going to see the momentum going on. And I think we are going to deliver as per the expectations of management and the market.
Very good morning to you, sir. Thanks for joining in. It's Puneet this side. You've seen roughly about 1.7% growth in your sales volume. So largely the revenue growth has been led by the value growth that you've seen. So what has been the increase on a YY basis in terms of plastic polymer prices, and where has Q2 essentially started off at? Have the prices gone in a bit lower in the month of July and the few days of August?
See, prices, because of this situation on geopolitical, whatever is prevailing, has gone up by almost 30% in the first quarter. And second quarter also, barring month of July, we have been seeing the prices sustaining at the same level. So August is a good month for us. We are a good beginning. September is going to be good for us. So these prices are going to sustain for Q2 and thereon also, because we are seeing the demand in the market, and UFlex being a fully integrated player in this field. So we are able to demonstrate a robust supply chain so that we are able to meet the demand of our customers, even in difficult times like this. Plus our reach to our customers, because we are near to our customers. We are present in Egypt, we are present in US, we are present in Mexico, we are present in Middle East, we are present in CIS countries, Europe, Poland, and Hungary. So we are not dependent on one region. So this is giving us a value advantage because customers prefer us now to source material from us, to source product from us, because the consistent supply chain, very resilient form of sales and production, what we are doing across the globe now. So that is paying a good result for us. And we foresee that going forward also, we'll be able to sustain this momentum in coming quarters.
Got it. And what about margins? How do you look at them? Because it's coming at around 16.5% this quarter for FY27. What do you think is going to be the normative range? By the end of FY27, how can we look at margins?
See, FY26, we ended a margin around 12.8%.
Right.
But because of our capex, what we have done, and the capacity utilization improving every quarter, we see margins growing better and better. And we are hopeful that at least we should get a 20% extra margin going forward. Result of these capacities coming on stream now. And our supply chain has been very robust because we have set up facilities near to our main suppliers, like we have Panipat fat resin facility at Panipat, near to government refinery, plus Reliance, we are near to Reliance refinery also. So getting a raw material also a big advantage for us. And whatever we have set up in Egypt, which is the second largest facility for us, there also we are getting a lot of raw material supplies without any restrictions. So these things are helping us in improving our margins and a delivery schedule to our customer. So we are very confident that going forward, we should deliver at least 20% extra EBITDA margin. I'm not saying 20% EBITDA margin, but 20% extra EBITDA margin We should be in the range of around 14 to 14.5 to 15%. That should be the decent margin we should achieve
Got
in the
it.
present circumstances. If circumstances pan out good for us,
Right.
it can be higher also.
Mr. Sharma, just because of paucity of time, just one last question from my side. Because of the strong value growth in Q1, you've almost done 5,300 crores in revenue. Last year, you did about 15,000. So is there a good number to estimate that your revenue will be roughly between 17 to 18,000 crores? And in terms of profitability as well, do you expect, because you've already done quite a bit of the profitability that you done in Q1 was for the full year of last year. So do you expect roughly 8 to 900 crores of profitability is achievable in FY27?
The FY27 is going to be a good year for us. And what I can say as of now, because Q1 has been an outlier for us, but going forward, we are going to deliver at least 30% on our top line. And if you look at EBITDA volume, like we have delivered 900 crores, but last year EBITDA was around 2,000 crores. We are going to deliver at least 30% more on EBITDA also for the full year basis.
Got it. So you'll be at roughly around 20,000 crores in terms of revenue. And we mentioned margin growth also. So your profitability, can we expect that number to be in the higher 8 to 900 crore range?
No, overall, you see, like for FY27, we are targeting, or you can say we can achieve a top line of around 20,000 crores. And EBITDA margin of 14%, you can take as a ballpark figure for this.
Got it. So 14% EBITDA, I got that, sir. So the question being on the profitability side of things, or if you don't want to give us a number, a quantification of where you might be, because you've done almost a lot of it in Q1, what you achieved last year, and hence the question.
No, I think your question is very valid. But what my submission will be that let's look at EBITDA margin.
Okay. All right.
Top line we'll achieve, and we should look at a 14% EBITDA margin. That should be the ballpark what you're looking at to achieve, which will be 20% growth in EBITDA margin percentage terms from last year.
Got it. Well, Mr. Sharma, we leave it at that. Thanks so much for joining in, giving us your time to NDTV Profit. Wish you the best. Look forward to our next conversation, sir.